In this THOR market update, I'm going to be giving an update on why we still like MLPs, Master Limited Partnerships, at this time. Hi, Jim Gore from THOR Wealth Management. Today I'm going to give an update on a sector that we like in the energy space, which is known as MLPs, Master Limited Partnerships, and more specifically, we're talking about Midstream Pipelines. And you can look at prior updates that we've done, as well as an update that we most recently did on why you want to look at the energy space for investing in artificial intelligence. So let's look at this chart here. This is a very interesting chart because this is looking at the price valuation of MLPs. That's the blue line here. And the blue line is looking at enterprise value divided by EBITDA. And right now you can see that it is below the historical average. And more importantly, notice over the last 4 years that it really has remained low here while you're looking at the Alerian index has gone up in value. That's the orange line. And this is very important because what we're seeing is these companies are doing extremely well, and I'll explain that a little bit later from an operational standpoint. That's why the valuations of MLPs has not gone up even though the price has gone up. So let's look at why the MLPs are doing well. First of all, Capex spending. Okay, if you look back in 2015, they were spending out 160% of their cash flow in Capex, whereas right now it's 40%. It's one of the lowest it's ever been. Well, what is the reason for that? Well, they built out these pipelines. Now they're just fixing the pipelines that are existing. Very difficult for pipelines to come up with new pipelines. The regulations have gone up and the costs have gone up. So what that means is that what's in the ground right now is actually worth more than they would have been because there's no new pipelines being spent. So these companies don't need to spend a lot of money on building new pipelines. They're just repairing their current pipelines. So that means more cash flow is coming out to shareholders. And that's really reflective in this next chart. And this chart is looking at net income after the dividends they pay out to us as shareholders. And notice that it was red in 2015 when the Capex was at 160, but also back in 2020 it was red. So they were paying out more in dividends than they were having in free cash flow. Well, notice right now, after dividends, these MLPs have $23 billion more in free cash flow. So they're going to have to do something for it. One, they can't build out new pipelines because it's very expensive to do so if you can get through the regulatory environment. So what they're going to do, and we've seen it over the last several quarters in these pipelines, they're buying back shares and or paying out higher dividends. With that excess cash, that's going to be coming back to us as shareholders. And that's why the share prices, even though share price has gone up, the valuation has remained low because they went from paying out negative dividends. They were paying out more than their cash flow to where they have excess cash flow, and that's going to end up coming back to us as shareholders. These things are making a lot of money, which is good from an investment standpoint. Now, the other thing is that you have to look at what is going on in the market. If you look at over the last 4 years, you can see here, this is using the Alerian mutual fund. And you can look at, this is just one example. You can look at any MLP mutual fund and see the exact same thing as I'm showing in this chart. And what we're seeing is, even though these MLPs have performed very well over the last 4 years, since their bottom in March of 2020, they're up 370%. Notice the assets in this fund are only up 224%. That means from the initial value, just simple math, it's about 140% of the value back in 2020 has come out of this fund. There's net outflows from the MLP funds. Very unusual when you're seeing an asset class that's doing very well. Valuation is still very, very low historically and selling at a discount. But investors are pulling out money from MLPs. This is very good from a technical standpoint because it's not being overbought. And because it's not being overbought, these things have a way to go. So conclusion, we think that the MLPs is still a good space. We're not in the early innings. We're probably in the mid innings, if you will, probably in the fourth or fifth inning here. Still has a way to go. Very, very strong. The investments are doing very well in this environment, and we continue to see them do very well going forward. If you have any questions or concerns, as always, reach out to us at our website or give us a call. Thank you. Look forward to talking to you in a couple weeks.